Hey everybody, this is Warren Barhorst. I'm the CEO of Iscential. We're a risk management insurance, financial service, and consulting firm out of Houston, Texas. The reality is insurance prices are like gasoline. And when I say gasoline, it's amazing to me that sometimes you can go to one store and it's cheaper than the other store, but neither of those companies have a better process. So Exxon and Shell, for example, they don't have a method of getting the oil out of the ground. That's a technology that makes it cheaper. They don't have a method of cracking it or distilling it into gasoline, the crude oil, to make gasoline cheaper. They both have to transport it via trucks to the gas station. They have to have the cost of building and supporting the gas station. So nobody has a technology or an advantage that should make it cheaper. But why is one cheaper some days? Because they're buying market share, right? They're lowering it, or they haven't caught up. They bought the last batch of gasoline for a cheaper number, so they're selling it cheaper. Eventually those prices go back and forth like this, right? So typically when you're getting a rate from your insurance carrier and you compare it to other insurance companies, you're probably going to find a lower rate. Most times the other carrier is just out of sync. So 2 years later, if you check the rate, you switched insurance companies and now you're with a new one, then you go to look again, you're going to find that the old insurance company you used to be with price is better than the one you switched to. It's because the rates are changing at different times. You can do that. The challenge with shopping your insurance every year is that you're going to get no loyalty from that insurance company. So when something goes wrong, they might cancel your insurance. They could surcharge your policy and charge you more because you have no customer loyalty. That the longer you've been with the carrier, more normally there's long-term rewards in discounts or things of that nature that you're going to want to take advantage of for being with that carrier for a long time. I think you should find the best carrier for your situation and then stick with that carrier. If their prices, if they get into financial trouble and start charging an arm and a leg and you can no longer afford it, then it's a good time to shop. But if your rate is going up with an inflationary rate, or there's a reason why the price has gone up, I mean, you just, it's amazing. People will file a $100,000 claim. Their price will go up a couple $100 a year, and they'll say, "Hey, can you shop my insurance?" I'm like, "Are you crazy? You're going to go shopping with a fresh claim, and this company just gave you all of your money back that you've paid them for 10 or 20 years, and you're looking to save money again." So I would tell you, you can shop, but you need to do that logically and systematically and understanding what's going on in the marketplace.